Thanks so much for tuning into the Trade Setup with me, Niraj Shah. It's going to be a busy Wednesday morning. Remember, there is a lot of commentary that is coming from the Trump-Harris debate as well, and we'll probably talk about that at the way end. It doesn't have investing implications, frankly. But like we always do, we start with the did you know, and this is a recent did you know. So did you know that the cash position for equity funds in India is higher at 4.9% at the end of July. We were talking about some high positions around elections, 5% higher at the end of July 2024. Just imagine the quantum of funds sitting on the sidelines waiting for a fall to come in. When it does, why shouldn't it be digested quickly is my only question. Maybe it doesn't, but I would suspect it would. Be that as it may, let's talk about the trade setup in the session today. So the US markets, you could argue that Dow was weak, but Nasdaq and S&P 500 both were in the green. Futures are currently marginally lower, but be that as it may, sentiment not all that terrible. Yes, China is down, but the other markets between 0.5% to 0.25% lower. So it's okay. It's completely digestible. Our markets implied open, well, flat as flat can be. Low beta market, India, isn't it? So what's the trade setup? I mean, I think before the trade setup, the key focus of the area, key focus area of the day today is this. Oil prices have closed at the lowest level yesterday since December 2021, as OPEC has cut the demand forecast. You know, this usually should be good news. I still believe it's good news. But I think on the basis of this, yes, India macro and the CAD situation improves, but this is also pointing towards slowdown, right? And which is not great news. So what's the trade setup for the day today? I think, to my mind, the index will likely consolidate it with, I still believe, a positive bias. There has been a bit of a rally already. I still believe there is a positive bias. Remember, yesterday we spoke about the positive bias continuing, still in that camp for now, looking at the positioning. But let's see how long it lasts. I mean, this is a catalyst, usually lower oil price, but the fall and the nature of the fall hints at global recessionary winds, which typically is not taken too well. My only caveat out here is that we are hitting that block of recession at a point of time when the Fed starts cutting rates. Almost every guest that I speak to is saying, no, Niraj, it will not be positive. I still think that there is just that little bit of a last hurrah left for the markets before they come off. The reason why I say that at some point of time they will now come off is because everybody that I meet and who's a smart money manager is taking money off the table from some of the halo themes as well. So power, for example, one of the smartest money managers in that sector that I met yesterday is himself saying that power valuations are stretched and they are booking profits here. So watch out, not necessarily energy per se, but power stocks, keep that in mind. Also, to my mind, the best bets continue to remain OMCs and pharmaceuticals. They've played out well, Pharma thus far, OMCs not quite. I still think that time will come. Watch out for the July, August, September quarterly results for the BP, HP, IOCs of the world, HPCL in particular as per MK. And I think those stocks should be something to keep an eye out for. So I do believe that for today's session as well, BP, HP, IOC remain the key stocks to focus on because of the price forecast. Now, you know, on the 4th of September, MK came out with a note. We did an interview with Niraj Shah of MK as well then. It's a lovely conversation. You might want to go into any of our social media handles and try and hear that interview too. But they say that the most obvious and the most powerful investment hypothesis currently is oil marketing companies. They expect OMC earnings to blow out over the next 2 quarters, which is the current and the next one. So keep an eye out for oil marketing companies. ONGC, on the other hand, and the stock has corrected viciously in the recent past. Nuvama retains a reduced rating. The target price is 232 versus the current price of 295. They say that the earnings are poised for a free fall as the $75 per barrel crude threshold has been breached. The market exuberance contradicts the missed production targets and the missed guidance enough number of times in the past. They say that ONGC has repeatedly missed guidance, and they're saying that only 18% of the street is bearish on ONGC, which indicates excessive exuberance. Let's see if ONGC is a bit of a fall in today's session also or no. Jubilant Pharma Nova could be an interesting one. The US FDA has classified the Washington facility as a voluntary action indicated. may see a bit of a reaction. IRB may see a bit of a negative reaction as in the session today. The government has said that there is no toll for traveling up to 20 kilometers on highways and expressway, and toll collection for over 20 kilometers to be based on distance covered by vehicle as per the satellite data. So watch out for IRB infra. Inox India has gotten a patent for cryogenic liquid-based variable temperature cold storage unit and methodology. Now, I have no idea whether this is a big mover for the stock or no. I'll be honest. But if it moves, you should know maybe this could be the reason why the stock is moving. So keep an eye out for this as well. Some brokerage notes. Now, this might be a bit difficult to explain, but I'm going to try my best with the help of my producers. Jefferies has come out with a note, and they have given some stock recommendations. So the fresh inclusion to buys in their list: Chola, ICICI Lombard, and this is interesting because Citi has a negative note, which I'll come to in a moment. Coal India, which has replaced Hindalco. Siemens India, which has replaced Hindustan Aeronautics. ITC, which is a new inclusion. HUL, which has replaced GCPL. Jubilant, which has replaced Nykaa. And Sun, which has replaced Mankind. So some changes that they have made. Fresh inclusions to buy also include Zydus Life as well as Interglobe Aviation. The new underperform ideas from Jefferies: Petronet LNG, which has replaced HPCL. Clearly, you can't have HPCL as an underperformer anymore. SRF, and interestingly, Dixon. Now, why this, and the other ideas are Tata Power, IEX, Whirlpool. Why this is interesting? Because Jefferies is positive on ICICI Lombard, Citi is negative. Jefferies is positive or negative on Dixon, HSBC is positive. So multiple brokerages have multiple views, but I thought I'll get you the Jefferies view. Now, the other very interesting view, and I thought there was, they've described it well, is the Citi note on ICICI Lombard. They say they're initiating a 90-day downside catalyst watch on ICICI Lombard. They say the target price is 1575, which is a 29.4% downside. Now, why is this? They're saying there is gradual moderation in pace of gross premium growth as well as weakness in motor sales. There's a likelihood of unfavorable claims experience in the health insurance. Their health claims, by the way, was 560 basis points for ICICI Lombard compared to a negative 200 basis points claims for Go Digit or 180 basis points for Star Health. So their health claims ratio has really gone up. Lastly, scope for one-off adverse claims experience in the crop as well as the B2B segment. So they are opening a 90-day catalyst watch. As I said, the downside is 29.4%. So watch out. If this reacts, you will know why this. Maybe because Citi is included and opened a 90-day catalyst watch on their list. So watch out for this as well. Well, multiple other things. I'm sure I haven't covered all, but I hope this gives you a good idea of what could happen in the trade in the near term. India is a low beta market. We are closer to the Fed rate action than we were last week. And therefore, that remains the big thing that everybody should be watching out for. Remember, there's August CPI data coming out from the US today and tomorrow, 2 inflation data points, which could also have a bearing. So I think the markets will be watching out for that very, very keenly. Thanks so much for tuning into the Trade Setup.